Can you explain what a credit score is and why it is important?
A credit score is a numerical representation of an individual's or entity's creditworthiness, based on their credit history. It is important because it helps lenders assess the risk of lending money. A higher credit score indicates lower risk, which can lead to more favorable loan terms for the borrower.
What are the key financial statements you analyze when assessing a company's creditworthiness?
The key financial statements include the balance sheet, income statement, and cash flow statement. The balance sheet provides insight into the company's assets, liabilities, and equity. The income statement shows the company's profitability over a specific period. The cash flow statement tracks the flow of cash in and out of the business, indicating its liquidity and operational efficiency.
What is the difference between a secured and an unsecured loan?
A secured loan is backed by collateral, which reduces the lender's risk because they can claim the collateral if the borrower defaults. An unsecured loan, on the other hand, does not require collateral, which makes it riskier for lenders and often results in higher interest rates for borrowers.
Explain the concept of debt-to-equity ratio and its significance.
The debt-to-equity ratio is a measure of a company's financial leverage, calculated by dividing its total liabilities by shareholders' equity. It indicates how much debt a company is using to finance its assets relative to the value of shareholders' equity. A higher ratio suggests higher risk because the company is more reliant on debt, while a lower ratio indicates a more conservative financing approach.
Describe a time when you had to make a difficult credit decision. How did you approach it?
In a previous role, I had to decide whether to extend credit to a company with a borderline credit score. I conducted a thorough analysis of their financial statements, industry trends, and repayment history. I also consulted with colleagues to get their input. Ultimately, I decided to approve the credit with a higher interest rate and shorter repayment term to mitigate risk. The company repaid the loan successfully, validating my decision.
How do you stay updated with the latest trends and changes in the credit industry?
I stay updated by regularly reading industry publications, attending relevant seminars and webinars, and participating in professional networks and forums. Additionally, I follow financial news and updates from regulatory bodies to stay informed about any changes in credit policies and market conditions.
Give an example of how you handled a situation where a borrower defaulted on a loan.
When a borrower defaulted on a loan, I first contacted them to understand the reasons behind the default. After assessing the situation, I worked with them to restructure the loan, which included adjusting the payment schedule and extending the loan term. This approach helped the borrower manage their cash flow better, and eventually, they were able to resume regular payments.
How do you prioritize your tasks when you have multiple credit assessments to complete?
I prioritize my tasks based on the urgency and complexity of each credit assessment. I start with the most urgent cases and those with tight deadlines. For complex assessments, I allocate more time and resources to ensure thorough analysis. I also use project management tools to keep track of my tasks and deadlines, ensuring nothing falls through the cracks.
Can you describe a time when you identified a potential credit risk that others overlooked?
During a routine review of a client's financials, I noticed a sudden increase in their accounts receivable days, indicating potential cash flow issues. This was not immediately obvious to others because the company was still profitable. I raised this concern with the team, and upon further investigation, we discovered that the company had recently lost a major client, which was affecting their cash flow. This allowed us to take preemptive measures and adjust their credit terms accordingly.